Hi there, my name's Miles Pitcher. I'm the owner of Superior Lending. I've been in the business 23, 24 years now, and I want to share with you some of the worst mortgage advice that people actually listen to, and it really can shoot themselves in the foot when it comes to mortgages. So let's get started. Number one, lie about your income. Just make it up, or maybe you even work for a family business and they just say, we'll give you a raise so you can qualify to buy a house. Underwriters are smart. They will discover this. They will check this. They check pay stubs. They check tax returns. It's ridiculous. Just you can't do that. It's fraudulent, and they will catch it. Also, if it comes to doing your own tax returns, if you're self-employed, you cannot go back and amend your tax returns just to show more income to be able to qualify for a home. That doesn't work. So be careful on that one. Number two, buy the home as a primary residence, or at least tell the underwriter that's what you're going to do. But you don't have to move into the home, and you can turn it right into a rental because you'll get a better interest rate and a lower down payment if you do a primary residence loan. I'm telling you, people, occupancy issues are being watched very, very carefully. We've had several clients lately where some of their first homes these people bought 3-4 years ago, the underwriters are looking at seeing, did they really move into the home? So when you buy the home and you agree to own or occupy it, you have to own or occupy the property. Don't lie to the underwriter about the occupancy. All right, get your mortgage from the bank where you already have an account. I'm not saying that the banks are going to have the worst rates, but they generally do. So I highly, highly recommend you get a quote from a mortgage broker who's able to look across 30, 40, 50 different lenders and find the one that's going to give you the very best rate. So please shop around with a mortgage broker who will do the shopping for you, but just don't trust your credit union and bank on their rates and loans. Dave Ramsey used to promote this, that you needed to have 20% down payment before you bought a home. Not good advice. The sweet spot is really around 5% down. Yes, you'll have to pay some mortgage insurance, but if you have good credit, it's really not that expensive to do, and it gets you in the home where you can take advantage of appreciation. The key in all this, obviously, is making sure that you can afford the monthly payment. So if you can afford the monthly payment, get into the home. I had a client who just recently did this. Even though they had existing credit cards with large credit limits, they thought they had the down payment from somebody paying them back a loan. They weren't able to get that money back from the loan. So what did they do? They drew the money out of their credit cards. The underwriters will ask, where did that down payment money come from? And even though it was allowed out of their credit cards, it then showed a much larger monthly payment on those credit cards, and they didn't qualify. So do not do that without talking to your loan officer first, and especially don't open new credit cards during the underwriting process to get down payment money. Talk to your loan officer first before you make that move. Always go with the lowest interest rate. That could be true in some situations, but let me give you an example why it wouldn't be. FHA loans carry the lowest interest rate generally. However, their mortgage insurance premium, monthly mortgage insurance, and the upfront mortgage insurance may make that a worse loan than a conventional loan that does have a higher interest rate but lower mortgage insurance. So just don't always focus in on the interest rate and get obsessed with that. People who go out shopping, I had a realtor I work with who took out a client who assured them that they make lots of money. They had great credit. They even went out and made an offer on the home without a pre-qualification, pre-approval letter from me. They went under contract and then came to me and said, we need you to get this loan approved. We pulled their credit. It was a 520 score. So get your pre-approval done before you go out shopping. So we get this all the time where a client says, don't pull my credit. I don't want my credit dinged when they're getting ready to go home shopping or to be able to get a pre-approval. Most of the time now we do soft credit pulls. Doesn't hurt your score. And even if it is a hard credit pull and there are multiple hard credit pulls, it won't hurt your score if all those hard credit pulls are done within a 14-day period. They're counted as one. So don't let that be a reason that they don't pull your credit. All right, here's another one. This just happened. I had a client who bought a home. During the home buying process, he went out and bought a new car. He got a lease on it, actually, and financed it, but it was supposedly in the business name. And in fact, all the documents are in the business name. However, the finance company put that lease or loan on his personal credit. So he closed on the home, and then the next day the lender came back and said, oh my goodness, you have new credit, you don't qualify now. So this guy is scrambling, and we don't have it resolved yet, to get his business partner to take over the loan and get that off his credit. He's in trouble with that. So just don't make any moves without talking to your loan officer first, and don't assume that because it's in the business name that they won't attach it to your personal credit also. Bonus bad advice. Sometimes we see people who skip home inspections when they're buying the home. Even though the mortgage, we don't see the home inspection report. Do not buy a home without getting a home inspection report. It is critical. It is thorough. It is money well spent to get that done. And last bonus piece, I know there's a lot in the news right now about realtors, their commissions, and what's happening there. I would be scared to death for one of my kids or a client to try to buy a home without using a real estate agent. There is so much they do to protect the client, negotiate. You just think that all they're doing is just shooting you a list of homes. They do so much more. And a lot of it is behind the scenes. And I assure you, don't buy the home without a real estate agent. There will be ways to work out how their commission can be taken care of so that it's not a massive burden on you. I promise you that'll happen, but use a qualified, experienced real estate agent. If your mother-in-law is a realtor and she's never done a transaction before, that's not good. You need a realtor who's experienced. If you need suggestions on who to use, let me know. We have lists of national real estate agents who are top producers who will take really good care of you. Here's how you can get a hold of me and my team. We are here to help you answer questions you have. Thanks for watching this video. Again, my name's Miles Pitcher with Superior Lending. Have a great day.